During the past 3 years, a massive car price bubble has emerged, and experts predict that we are on the brink of the largest car price crash in our lifetime. As consumer demand cools off rapidly, a flood of supply floods the market, rendering the elevated prices unsustainable. This applies to both new and used cars, and the collapse has already commenced. In fact, today we have identified certain models that have experienced significant price declines in 2023, and we have gathered revealing data and honest forecasts about the unfolding auto market crisis. Before we proceed, we kindly request your support by giving us a thumbs up and subscribing to ensure you don't miss our future videos. For more than 2.5 years, new and used car prices steadily rose, aided by dealer markups. Limited availability of semiconductor chips hindered production, while the demand for cars continued to outstrip supply, leading to record-high vehicle prices. However, the situation is vastly different now. Microchip shortages have eased. Automakers are increasing production to maximize profits and meet consumer demands. At this point, it is highly likely that we have already passed the price peak, but the decline we have witnessed so far is insignificant compared to what lies ahead. Throughout the country, wholesale prices are plummeting, with Manheim consulting experts estimating a 9% drop for new models and a staggering 26% decline for used cars. Over time, sinking wholesale prices translate into corresponding reductions in retail prices. The firm highlights that in April, for the first time in 20 months, the average price of a new car fell below the sticker price. Data from the firm also reveals that the unsustainable high prices have become apparent. Between January 2021 and January 2023, used car prices rose by an impressive 52%, while new cars experienced an increase of nearly 28%. During the same period, the median household income in the U.S. rose by 13%, but this figure does not account for inflation. When factoring in the average inflation over the past 2 years, the actual increase in incomes is only 7.1%. Consequently, in the past couple of years, the affordability of used cars has decreased by nearly 40%, and new cars have become 15% less affordable without considering inflation. In an environment where a significant number of buyers are being priced out of the market, a crash is imminent. The timing remains the only question. Analysts have issued warnings that a notable correction is already underway, but they also anticipate that the forthcoming collapse will surpass anything previously witnessed, surpassing even the severity of the 2008 auto market crisis. While supply chain pressures are easing and replenishing the inventory, we are transitioning from a state of no supply to an excess of inventory. Consequently, the values of many vehicles are plummeting at a much faster rate than anticipated. A recent report by UPS estimates that global car production will surpass sales by 6% this year, resulting in an excess of 5 million vehicles that will require price reductions to be sold. According to Yahoo Finance, automakers are presently preparing for a price war, with some already implementing price cuts. UBS conveyed in a note to clients that given the optimistic production schedules, there is a significant risk of overproduction and mounting pricing pressure as a consequence. The price war has already commenced within the electric vehicle (EV) sector, and it is expected to extend to the combustion engine segment in the latter half of 2023. The most prominent illustration of this trend is evident in Tesla's recent price reductions for its new cars. Since the beginning of the year, the Model X has experienced a depreciation of over $14,000, or 23% of its value. The decline in prices also extends to the brand's used cars. For example, used Model 3s are particularly affected by the ongoing downward trend, with their average price falling by $11,750, from $51,251 to $39,976 last month, as reported by icars.com. Similarly, in 2022, the average price of a used Infiniti QX80 stood at $52,874. However, within a year, the average price of this large Infiniti SUV on the used car market dropped by nearly $12,000, reaching an average of $41,094 in April, marking a 22.3% plunge. Nissan's equivalent to the Infiniti QX80, the Armada, has also experienced a substantial price decline this year. While the used version typically cost $41,771 last year, the current average price of used Nissan full-size SUVs reportedly stands at $33,300, reflecting a 20.3% price decrease. Furthermore, researchers reported that used versions of Land Rover's mid-size Discovery SUV currently have an average price of $40,841. Comparatively, a year ago, the average price for a used Discovery was $50,973, reflecting a decrease of 19.9% thus far. Several other popular models are expected to experience significant price reductions. The new Nissan Frontier, for instance, currently costs around $39,833, but is projected to drop to $27,146 by the end of 2023. Even higher volatility is anticipated in the used car market. Experts forecast that a 3-year-old Toyota Camry, which is currently being sold for $27,404, will cost $16,548 by the end of the year. Similar trends apply to well-known used SUVs such as the Jeep Compass, which is expected to decline from $25,605 to $15,706, the Honda CR-V dropping from $30,193 to $19,599, and the Toyota RAV4 falling from $32,056 to $20,534. Unfortunately, for those who recently purchased these used models, the future outlook offers no relief. While the corrections witnessed so far have been significant, it's crucial to note that used vehicle values have increased by a staggering 88% since 2020. Therefore, they should brace themselves for substantial declines in car values in the coming months. Additionally, as consumers drive their vehicles off the dealership lots, an immediate loss of 10 to 20% of the car's value occurs, exacerbating the overall losses. The worrying repercussions are reverberating throughout the auto market. The previously unjustified froth in equity market prices is dissipating, resulting in price plunges and leaving investors and consumers with reduced spending power. The mounting pressure on disposable income is putting many Americans in a challenging situation. Although consumers' disposable incomes saw an increase in 2020 and 2021 due to debt forbearance, stimulus checks, and improved unemployment benefits during the pandemic, many buyers who benefited from these programs are now defaulting on auto loans from those years. Barron's reports a distressing surge in repossessed vehicles in the United States. Auto dealers are witnessing repossessed vehicles being sent to auction, with buyers' loan-to-value ratios exceeding 130%. In some cases, the ratios are even higher, reaching 140%, as quoted by one dealer. The loan-to-value ratio compares the loan amount with the actual value of the vehicle. In essence, American buyers are defaulting on car loans worth $26,000 for vehicles valued at only $20,000, resulting in an LTV of 130%. During its recent earnings call, Wells Fargo, a financial services company, disclosed an increased loss ratio in auto loans. Should the supply continue to rise, resulting in lower prices, a newly purchased Land Rover would only retain a fraction of its value after 5 years, as it depreciates in line with its sticker price in a normalized price environment, rather than maintaining the inflated price at which it was bought. In short, many individuals stand to lose a significant amount of money. However, government officials claim there is a positive aspect to this situation. They believe the car market crash will help curb the inflation they themselves have caused. They assert that it will bring relief to consumers. Nevertheless, those who committed to extended leases with high interest rates will face catastrophic consequences. Just earlier this month, J.P. Morgan released a study projecting that the average price of used cars would reach $21,000 by midsummer. Jonathan Smoke from Cox Automotive agrees with this prediction. He states that by mid-year, production should stabilize and improve, resulting in more affordable monthly payments as prices decline. Grant Piper, a sales manager at Tom Tinsdale Chrysler Dodge Jeep and Ram, confirms that this is already happening in his area. He notes that across the board, dealers are experiencing a sharper drop than expected. Chris Frey, senior manager of economic and industry insights for Cox Automotive, believes that the situation will worsen. He compares the current decline in prices to the 16 months of annualized declines averaging 5.8% observed during the financial crisis. According to him, new and used car prices are likely to continue decreasing throughout most of 2023.